I made about $3,000 day trading SPY, and it's simply because I let the trade come to me. And if you did the same thing, you could have made $2,000, $4,000, $6,000, and so on and so forth. If you can just see this very simple pattern. So, if you're familiar with my strategy, this was initially in the morning, the major demand zone at about 599.08. This was the major supply zone, which should be red FY at your specific spot. And the trade that I ended up taking was, if you know what my concept is, it's bounces off of the major zones. So here's what happened. There was a zone here on the 5 minute chart. It came back around and it tapped this area a little bit afterwards. But the problem, you zoom back out, but the problem of where that basically ended up happening is that it was right here as far as the bounce goes, and it started going up, which sure it would work, but these candles weren't really very, I guess you can call it pretty, essentially. Like this is the zone candle, the reversal candle wasn't really that low, so on and so forth. So I didn't take the trade, essentially. So what ended up happening is that since the way my strategy is, it's what's the lowest point of the day where two candles agree. It run from this is the major demand zone to this is the new major demand zone by about 1020 where two candles agree, and it started bouncing up. And so this is 1025 on this 5 minute chart here for SPY. And literally what ended up happening is basically the same thing. It came back down to tap it, and then it started running up. So if we go to look at the exact trade that I did take, it's the one right here then. So that zone was over here on that 5 minute chart, but since we're looking at the 1 minute chart, it came back around, as we mentioned, came to tap this area, came up a little bit, came to tap it again. We got the zone candle. Let me zoom in for you. We got the zone candle right here, reversal candle, confirmation candle, because more than 50% of it's outside of the zone, and then boom, the entry piece right here. We got our stop loss at the bottom of the zone, and our take profit was all the way up there. And our take profit, funny enough, if I actually undo those past zones, let me undo this ad here. Actually, let me go back and just redraw it for you. My little take profit areas were exactly as follows. The original major demand zone, which was right here, right? So get that, get this same little tool to redraw it back out in this little spot. So I entered in this little spot here, and I exited up here because there was basically nothing in the way. So if we go back to the 1 minute chart and you see how much area that is, right? So we got the zone candle reversal, confirmation, then followed by the little entry candle here. Entry went sideways, went down a little bit, also a little negative to a certain degree, and then it started riding itself on up. And then boom, sold it up here for that 3K profit, basically. And then I still had time, right? It went sideways and then it started falling down, and that's perfectly fine. But call from here to there, done and done. And that was one trade for the day. That was the only trade I took. But if you notice, and check this out, let's actually look over this side over here. So we have the same zone that we already mentioned. We saw it bounce off here, start going up. So in my mind, that basically says, you know what? This is a pretty interesting actual trade here, a very important zone at this point. So if it comes down and hits it again in some way, shape, or form, there's potentially a trade in my mind. So look what happened. It came down, hit this area. Not really much of a zone candle since it didn't actually come down and hit it. So I don't count this as a zone candle. But if you did, you can see why it was messy anyway. So hypothetical zone candle, reversal confirmation, and then not really an entry in the first place. So this is why for me it needs to be very specific on what these things look like. To me, if I get this piece here, this is not an entry point. This zone candle did not come down and actually tap it. And this entry candle, even if this was an entry candle, is not very higher, much higher than this green candle. That's completely different than all of the stuff over here that we just talked about, right? Visually, this guy went down, bounced up perfectly. Visually, this one went down and spiked up very kind of rapidly in a short fashion anyway, and then broke below it, which is fine because it layered up the next trade, which ended up being this piece here, right? It came down, hit it, got a zone candle where I just circled, reversal, larger confirmation candle, and then boom, your entry candle, right? Nothing in the way at all, massively spiked down. A lot of students actually took this trade and it went perfectly fine. And of course, after such a large candle going down, I would hope you would sell. Even if I don't even get into where take profits are and so on and so forth and etc., you should know if something goes down pretty massively, pretty rapidly, get out the trade. If you did, great. A lot of the ways, the way I like to think about trading is essentially like being a surgeon when you really think about it. There's very important tasks you need to do, and if you do said task, even if it is stressful, you can make a lot of money. But if you make a bunch of random mistakes on one patient over here, then you'll miss out on and mess up on the next patient over here. And it can have drastic effects because then you'll say, well, oh my God, this happened over here and I missed out on this opportunity here. Well, I guess I'll just do this for an option put and hopefully I'll make money, or in this scenario, as a surgeon, hopefully if I just do this, then maybe I can help this person here with this open heart surgery. That's a very stressful situation from a career perspective. But this also is, you're going into battle on a regular daily basis as a day trader. You can't use your past trades as ammo against your own self to harm yourself. Each trade's its own thing. If it's pretty, a nice trade like the one on the left over here, take it. If it's not, don't take it. Be risk averse. Perfectly fine, right? But if you see basically, and risk averse to the sense that if you see major zone plus ZRC plus a clear take profit, great, take it. If you don't see, if you see a major zone over here, you don't see a very clear ZRCE, don't take it, right? That's why this one over here is not a good move, the one in the middle. And then there were other trades later on, but that's basically what I'm kind of want to leave you with here. So be picky, be concise, be a surgeon when possible, and you can actually get probably the money of a surgeon, if not more, realistically, without doing the open heart surgery. So yeah.